Hey, welcome to another episode of Doing Real Estate Smart, real estate education for common buyers and sellers. My name is Rick, and in this episode, we're going to be covering getting pre-qualified. What do lenders look at? Now, when it comes down to any real estate transaction, the first thing that you're gonna have to do is get a pre-qualification. This is going to determine exactly how much you can qualify for when it comes down to purchasing a property, purchasing a home, or purchasing any type of real estate. Now, lenders look at four things usually: your earnings, your credit score, your debt, and your savings. So number one, earnings. In this case, in this video, we're just going to be covering a few things when it comes down to earnings, because there's many different types of earnings. But here we're going to be looking at employment and self-employment. When it comes down to employment, it's pretty basic and simple. They look at your W-2s, your taxes, and they look at least 1 or 2 months of your pay stubs. This will give them a good idea of how much you earn, and they'll be able to determine how much you can qualify for based on that. Now, when it comes down to being self-employed or a business owner, it's a bit more tricky. They take 2 years of taxes and they take the average of your adjusted gross income. Now, your adjusted gross income, which you would probably already know, is the number after all your deductions. Now, this will actually make it seem like you earn a lot less than what you really do. Now, so this is where it gets tricky, because if you're looking to qualify for more, the lender could only determine that based on your adjusted gross income. So if you have a lot of deductions, that actually decreases the money, that number significantly. So you probably end up qualifying for a lot less than what you'd really be able to afford. Does that kind of make sense? So a piece of advice that I always give my clients is, if they're looking to purchase a home in a year or so, I would suggest that for that year prior to purchasing a home, to reduce the amount of deductions they make on their taxes for that year. This will then increase their buying power when it comes down to getting pre-qualified. The second thing they look at is your credit score. Now, your credit score is going to determine what type of loan program you'd be able to qualify for. The most common loan programs are going to be the FHA, the conventional, and the VA and the USDA. So a 580 is pretty much going to be able to qualify you for most of these programs, but this really depends on the lender as well. Every lender works a little differently. Some lenders are more conservative than other lenders. So some lenders would require you to have a 620 or so to qualify for most of these programs. Other lenders will require you to have a 640. So it just really depends on them. But again, a 580 or so will qualify you for most of these. The FHA for sure, conventional maybe not. Maybe some lenders will require, I've seen some lenders require a 660 in order to qualify for conventional. Just the higher your credit score, the easier it is for you to get the loan. Does that make sense? So you always want it to be as high as possible. And for those of you who have low credit scores and are a little discouraged, please don't be. There are very simple, small things you can do that can actually increase your credit score significantly. I've seen credit scores increase 40, 50, 60 points in just 1 month by them just doing just a few things here and there. So please don't be discouraged. I'll be covering a video on that as well in the future. So stay tuned, all right? The third thing they look at is your debt. So they look at revolving debt, any credit cards, any auto loans, any student loans or personal loans are the big ones they look at. Any like medical bills, they don't really care for. They don't consider that as debt. They're looking at revolving debt, okay? So they take the minimum payments of your credit cards and the minimum payments of your auto loans. If you're actually paying extra on your credit cards, they don't care about that. When it comes down to your student loans, now this is the one that gets a little tricky. So even if your student loans are deferred, some lenders are still going to take 1 to even 2% of the balance of your student loans and use that against your buying power. I've seen other lenders that don't do that. If your loans are deferred, they don't use any of that against your buying power. So again, lenders, even though the government establishes a lot of these regulations, a lot of lenders work very differently when it comes down to your credit score and how they look at your student loan as well. And the fourth thing to look at is your savings. Now, when it comes down to purchasing real estate, you're always going to have some amount of down payment and closing costs as well. Closing costs are going to be any fees, taxes, you have utilities, you have a bunch of other fees that go into purchasing real estate, and those are all pretty much fall under closing costs. The down payment, yes, this is going to be determined by the program you qualify for. Say, for instance, the VA and the USDA are 0% down. So that's actually great if you can actually qualify for those. But usually the conventional and the FHA are going to be between 3% to 3.5%. It can even go up to about 5%, okay? Depending on your credit score, depending on the lender, depending on all those other factors. Now, what the lender wants to make sure is that the money that you use for the down payment and for the closing costs are funds that are, I guess, to put it simply, are just legal funds. You know, nothing that these aren't funds that are coming from illegal transactions or anything like that. It could be gifted to you. It could be coming out of your investments. It could be money you just had saved. So as long as they can actually source the funds, they're okay with that. Let me see here. I was trying to see if there's anything else that I want to cover, but again, I'll be covering each of these topics in a separate video to go into it more thoroughly and cover more information on that for you. But overall, this is exactly what lenders look at. Every lender is going to kind of treat all these just a little differently because they all have their own little rules and regulations that they follow. Again, this is Doing Real Estate Smart, real estate education for common buyers and sellers. This channel covers a lot of different topics in real estate, such as this. I'll be covering even more topics that are going to be that I believe are useful for just common buyers and sellers that are not very familiar with real estate. If you like this video, go ahead and like it. If you want notifications on future videos, go ahead and hit the notification button. And any comments, any questions, feel free to leave those below as well. Thank you for tuning in, and I'll see you next time.